Hey guys, how's it going? So today has been literally the most insane day in markets that I've ever seen. And I've been in crypto since 2017. I've seen everything. I've seen the Luna crash. I've seen the COVID crash. I've seen everything. But today tops the cake. And if you've just woken up or you're not 100% sure what's going on, I've made this video. It's going to be about 10 minutes long. I just want to go over everything that's happened so you've got a full overview. Keep it all really simple so that you can understand everything. And just give you that clarity that you need, because what has happened today has changed the crypto markets forever. And if you don't understand truly like everything that's gone on and you aren't fully aware of what's happened, it's going to affect how much money you make going forward, because Binance is now like 90% of the crypto market, and the long-term effects, the second, the third order effects of what has happened today it's gonna impact markets for months and months and months. So without further ado, let's get into it. So what's happened today? What has actually happened? Well, basically, to sum it up, Binance and FTX are the two largest crypto exchanges. Binance is the biggest one. FTX is the second biggest one. FTX has been, for the past year or more, been trying to get into bed with Congress, basically. They've been doing donations to big charities. They've been trying to be really nice and friendly to Congress and the US regulators, because they want to have regulatory advantages over their main competitor, which is Binance, who isn't able to have the same regulatory advantages. And so Sam has been doing this for a while. And as you can see here, this was a recent tweet that he did. What he said was, I'm excited to see him, which is CZ, repping the industry in DC going forward. He is allowed to go to DC, right? Basically, what he's trying to say is Sam is in the US, he's with Congress, he's with the regulators, and CZ is not there. He's trying to rub in that CZ is not going to be able to get the same regulatory advantages as Sam, and that Sam is going to be lobbying against Binance. And so obviously CZ's not happy, because that's pissing him off. And so what's happened? Well, FTX released their balance sheet. FTX and Alameda released their balance sheet about a week ago. And this has gotten really popular over the past few days. Everyone's been talking about it. Well, why is this such a big deal? What's the summary? So the big issue, if you read this thread, is this part here. Alameda's balance sheet, as shown on the article, is a little concerning, especially because Alameda borrows crypto with FTT. So basically what Alameda has done is they've borrowed money, and the collateral that they have to borrow money is literally FTT tokens. Imagine going to a bank and saying, hey, look, I've got some Ethereum. This is my collateral. Let me borrow some money. It would be insane, because FTT, Ethereum, all these crypto assets are highly volatile. If one of the largest trading firms in crypto is borrowing money with FTT tokens, it is just insanely risky. And so this affects everyone. This affects the lenders of money to Alameda. This affects Alameda. This affects FTX customers. It affects everyone. And so this has gotten really popular on Twitter. And so why is this an issue? As I said before, basically FTX prints FTT tokens. They've got billions of dollars of tokens, but if FTX went to sell billions of dollars of FTT tokens, would they be able to get billions of dollars? No. It would crash the price. So they've only realistically got a very small percent of the actual dollar value of what the FTT tokens represent. If they sell $3 billion of FTT tokens, they might get a few hundred million, maybe, at most. That's how, because it's a liquid, right? Markets are not that liquid. And so CZ noted this, right? He looked at FTX, he looked at Alameda, he looked at the balance sheets, and he made an assessment. He said, you know what? Owning FTT in our portfolio is too risky. They've done some post-exit risk management, and they're learning from Luna. So basically, they're comparing this whole scenario to Luna. And they gave support before, but they're not going to pretend to make love after divorce. But they're not going to support, this is a big sentence here, but we won't support people who lobby against other industry players behind their backs. What he basically said is that CZ is not going to support Sam lobbying behind their backs with Congress and US regulators. So CZ owns how much FTT? He owns about just over $2 billion. That's a lot of FTT. So CZ is basically going to sell $2 billion of FTT. And what does this do? Well, people start freaking out, right? Holy shit. FTX, the balance sheet isn't very good. Binance is about to sell $2 billion of FTT tokens. I'm scared that my money on FTX is not safe. And so people en masse have been withdrawing their money from FTX out of the exchange. And you can see the amount of exchange reserves in stablecoins on FTX right here decline rapidly. Let me shrink myself so you can see. So yeah, the reserves of stablecoins on FTX have just declined to what levels? It looks like July 2021. So it's insane. It's been a huge drop. And this was 9th of November. So this is an issue because FTX is not backed one-to-one. For every dollar that you have on FTX, it's not they have a dollar of money that that can represent that. So it's going to cause. It's basically there's a fear in the market that this is going to cause like a run on the banks, right? When you go to a bank and you put money in it, they don't have that same $10 that you put in. They have a system where the money, like $10, might only be backed by $2. And so FTX has a similar thing, not the same extremity as banks, but not when you put $1 on FTX, it's not necessarily going to stay there's an entire dollar backing that. And so because of this, the FTT token price has crashed, and FTX has ran into issues which we don't fully know. But what they've gone ahead and done is they've actually signed a form with Binance to sell FTX to Binance, which is insane. And so if you look over here, we have the liquidated long on FTT USD, selling 100 million at $7, which is absolutely insane. You can see got 5,000 likes. So the price of FTT, as you can see here, has crashed. It's gone from about $20 down to $5. It went all the way to $3. People are concerned about FTT as an investment because when Binance buys FTX, what do you think happens to the FTT token if Binance has the BNB token? Well, the FTT token becomes sort of worthless because Binance wants BNB to win, and they don't care about FTT. They don't care about FTX's exchange token. And so this has led to the crash that we've had because it's like, well, there's no real use case for FTT anymore. And people don't want to hold FTT. People don't even want to be on FTX. So that's why the price of FTT is crashing. And so, well, why is this an issue? Why does it matter if FTT is crashing? Why does it matter? Well, if you look here, there is a contagion risk of FTT crashing, which you guys might not be aware of. So basically, Alameda borrowed money using FTT as collateral. If Alameda borrowed $1 billion and backed it with $1 billion, let's say $500 million of FTT tokens, and the value of these tokens has fallen by 75%? I think it has been 75%. What does that mean for the value of their collateral? Well, the collateral that backs the loans is now worth 75% less, making it extremely difficult for Alameda to pay back the loans that they've taken. And so that's what it talks about in this thread here, which is really interesting. And so the whole market has crashed. If you look at in even coins like Solana has crashed to new lows. Sorry about the mess on the chart. If you look at Ethereum, even Ethereum is crashing. The entire market is crashing because Alameda on its balance sheet has a lot of different coins that they're going to have to sell in order to cover the loss of FTT, of their collateral going down. So they borrowed money using FTT. FTT went down 75%. They need to sell other assets so that they've got enough money to back this loan, basically. And so when I say this loan, I mean the several loans that they get from many different people. And so let's read this. CZ bought FTX but not Alameda. If Alameda is your counterparty on anything at this point, I would be extremely worried. Alameda previously borrowed hundreds of millions of dollars from DeFi. So the places that Alameda borrowed money from using FTT now have issues as well. Because if you're a lender to Alameda and they can't even pay you back for the money that you gave them, they just gave away hundreds of millions of dollars that they won't get back. So all these different platforms, TrueFi, what's another one? Clearpool Finance. Okay, what's it called? Clearpool Fin. Maple Finance. Ortho Credit. MIM Spell. Alameda borrowed $20 million MIM against $50 million worth of FTT. All these platforms that lended money and probably not going to get paid back now. And so this has caused clearly a lot of concern in markets. That's why the entire market is crashing, because people are fearing a Celsius 2.0. Right? The issue with Celsius was people had their money on the exchange, and Luna, which was a large portion of their assets, went to zero, right? And so when people withdraw from Celsius, the value of their assets has actually declined significantly because Luna was such a large portion of the money that Celsius had as collateral, right? And so the similar thing is happening here. FTT, the token that is the collateral, is going to basically zero, and all the people who have lended money are not going to get paid back now. And so this is going to cause issues all across crypto for months to come. There's second and third order effects. As I said, the second order effect would be the lenders. The third order effects might be something else, right? And so this tweet here is really interesting. The Bloomberg Billionaires Index has been updated, estimating that Sam's net worth is $1 billion, down from $16 billion yesterday. So Sam's net worth has declined $15 billion, or about, like, what is that, 90% from the all-time, from its high, which is insane. So what do you guys need to do from here onwards? So if you have a significant amount of money on FTX and this has affected you, you need to understand that you've made a mistake, because you should not be storing a large portion of your crypto net worth, or your net worth in general, on a centralized exchange. The quote goes, not your keys, not your coins. If you do not own the money that you hold, if you do not own the keys to the money that you own, then you do not own that money, because it can be taken away from you. You can't even, I don't even think you can withdraw from FTX now. So this is this is just another sign from the markets that you need to store your coins yourself. This is probably one of the biggest takeaways from this. And so if you guys found this video interesting and you would like to continue learning about crypto markets, I would recommend that you go ahead and download this guide right here. It's 100% for free. You'll find it in the comment section below. It'll basically cover a lot of concepts that I explore here in more depth in relation to the psychology of investors. And if you guys found this video useful, leave a like, leave a comment. I don't usually do news videos, but if you guys find these interesting, let me know in the comments below. But yeah, thank you for watching.